Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 13th of July, 2017, about 2:30 p.m. Central Daylight Time. Well, today was the second day of Janet Yellen's testimony, and as I explained to my subscribers at least, it's the first day of testimony, be it the Senate first or the House first or the Senate, depends on what time of the year. And that's going to be the key day because all the key questions are asked of the Fed chair. And today's action to it, okay, she reconfirmed what she said yesterday, that basically there isn't inflation. That's a problem for the market. The Fed still wants to raise interest rates again this year. You got 6 months or 5 months left in it. We'll see what they can do. And of course, she's going to trim the balance sheet, but it's going to take years to do so, and they have no intent of using it as a policy tool. That's very important. They don't want to disrupt the markets in any manner, and that's what they're telling you in plain English. Now, the other event of the day, I thought, was European Central Bank is expecting, or the rumors are that we should be expecting them to as early as September 7th make an announcement through their president about the unwinding of the QE. This year, in August, at the Federal Reserve Jackson Hole meeting, which gets widely televised, Mario Draghi will appear. He hasn't appeared in quite a while. And there's rumors that maybe he'll allude to some ideas at that meeting, which is just several weeks off. So things you have to watch. Is it impacting the euro in a big way? Well, you would think maybe it'd offer a bid. It isn't. The market's down 11. It's having no impact on the dollar, which is basically unchanged. It's down 0.2, not even a one full tick, if you will. The Swissie's a little more bearish. The pound and the yen are the higher markets today, and the yen did lose its embedded reading now 2 days in a row. So that takes it out of that period where it was looking so bearish, and now that's gone. Metal markets had little reaction to everything going on today, including that Fed meeting. So where are we right now? Well, on the weekly charts, you're in a trading pattern, as I said. Let's call it 1295 down to 1204 at this time, and that seems to be where you're at. You know, this $12 level is fairly important right now. When we take a look at an area chart of just closing prices on a daily basis, you've got the pattern of lower highs, lower lows. That's still bearish overall. When we take a look at just a bar chart, you can almost see that you've got a trend line right through here and another one that picks up through there. You're forming one of those triangle patterns again. We've done that so often, and they're not having a lot of meaning one way or the other on the charts. What is having a meaning is what the swing lines are doing. And since this day right here, you've had continual lower highs and lower lows. Now, with the market's action today and inside day, if you were to take out 1225.20, the whole chart picture would change. You would suddenly have a pattern of a low with a higher low and a higher high. That could easily happen, but it hasn't happened. And as I said yesterday, that means the bears are going to try to defend not allowing that 1225.20 to be hit. In terms of moving averages, they keep dropping away. The 18-day has been under that 100 for a while, and prices have stayed under both for a long time, basically, as you can see, right through here. Once you had one settlement up there, that was pretty much it, and that did the market in. In terms of Bollinger Bands, which offer you theoretical support and resistance to black lines, the market is not in play right now. If you should drop down, 1203 versus that last 1204 is a support area. Resistance, 1233.90 if you can clear 1225.20. Momentum-wise, this is where the market is now exciting. You lost the embedded reading. Now let's go to yesterday. Did you lose it? You did. You had a 21 reading. The day before, you see how these numbers were just going sideways under 20? they were confirmed bearish. So now you have 2 days in a row. What typically happens, I'm not using the word always because that is not accurate. What typically happens is very shortly, price and the 18-day average make a run at each other. We'll see if that is in fact the case now. And if I'm right, that will be interesting. We'll see if you can get up to those key numbers. The ETF, you lost, and let's go to yesterday's action first. Let's go to Wednesday. You lost the embedded reading here with the 2006 reading. You can't be over 20. It's that simple. You're allowed to say, well, it's just a fraction. You're over 20. End of discussion. And you did it again today. So if these markets are going to act the way that I think they might, you'll end the bear trend, go to the 18-day average over time here, and over time should be relatively soon. But that doesn't mean you're trending. It's just the end of a bear phase of the market if it does what I expect it to do. Doesn't mean it's going to do it. As a market technician, when you lose the embedded reading, I'm going to say it again. What I teach is price and the 18-day average often, not always, often, typically make a run at each other. We'll see if I'm right. In the GDX, that already happened, and now you're just playing at this 18-day average as your resistance point. So the miners, which had been stronger than the rest of the market, have fallen back a bit here, and they're just marking time too. The gold-silver ratio is still in favor of the gold. It hasn't stopped. And the last time it was at a big high was 82.54. This break in here did not take out right over here where I'm pointing that last low on a closing basis. Now, if you were to take out yesterday's close, which is 76.74 tomorrow, $1 lower, that would be a trend change as I look at it. You're not there. You can almost use these like swing lines, and that's where I got the idea when I created the swing line indicator to figure out trends. As you take a look at silver, you lost your embedded reading. Very important to me. It still means price and the 18-day average should come together. The manner in time that they do it is very important. This market lost it on Tuesday. Today is Thursday. If it doesn't get up and start making a move on it tomorrow, that means that the rally should be feeble in its nature. The quicker it happens, the better. It means that the market's gotten these people, in a way, caught. The longer it takes, it's just struggling to get up to that number. So that's something to watch. But in order to get to 1824, you have to break this chart pattern. You'd have to take out 1599, and that would result, if it happened tomorrow, in a pattern of higher lows, higher highs. That would end the bear pattern in the market. Ending a bear pattern doesn't mean it can't regain. It's not the beginning of a bull pattern. Ending it often just means it goes to neutral. The copper market is also void of a trend. It's got a lower low and a higher high in a corrective mode. Support should be around the 18-day average of closes. Momentum is turning down, but the metals are a mess. They're just not offering trades. In the platinum market, as you can see, if you look at the embedded reading, all embedded, then the market, watch this, loses it yesterday, goes right to the 18-day average, and it's just basically hanging there. It made its move already. It's void of a trend. You got a lower low and a higher high, and that's your resistance point. The one thing that becomes evident as a chartist is whether you like my moving average of the 18 or you want to go to a 20 or a 21. I've seen all these different theories on them. And I've even seen services that used to, I haven't seen them any longer, that optimize which one of those averages you should use on different charts. I've tried them over the years. I didn't find them worth their salt. That doesn't mean I'm right. I just didn't find them worth their salt. In the palladium market, you have a lower low and a higher high. No trend. The market lost its embedded reading. Let's just check it. Was it embedded there? Yep. Day before? Yep. And the day before. And when it did it, guess what happens? You go to the 18-day average. That's my theory. Now, if you take out 849.05, you negate the whole trend, and that's what you've done. And now you're in that wishy-wash period where you're unable to figure out what the market wants to do next. Dollar index remains in the bear camp. Today is the first day that both numbers that make up the slow stochastic are under 20. Let's go to yesterday. You see what I'm getting? You got a 2011. It's not there. So you're just oversold in a downtrend. That trend gets negated if you take out 95, 96. No more I can really say about it. So I look at it all, and it's summertime, and it's a quiet market. It's really that simple. The action today, not in metals, all in grains as weather forecasts again changed, and maybe what we're going to get is the end of that weather rally that we had. On the other hand, you know, they can bring bad weather back into the forecast, and then over the weekend you come in on a Monday and the market's going the other way. We still got to get through Friday. Let's talk about Modern Trader. It's a yearly subscription for $79.95 if you go to them and get it. It's really simple. Great magazine, covers an awful lot. We offer it for free. Same magazine, sent by them, all by email. Now they talk about trades, technicals and tactics. After the bell, Tom DeWard releases of different ideas. Oh, that's DeWard's, not DeMar. I've made a mistake there. And what you get through here is you get different stories, be it on stocks, be it on the futures markets, the FX market, the derivative market, cash markets, theories on options trading. It's all here, plus stories that come out every day via Market Focus for you to really get you involved. If you're a serious trader, this is something you want to look at. You can get it by either calling my staff at 866-973-2077. You can go to our website, www.iraepstein.com. And, of course, you can always get it by clicking, if you see me on YouTube, click on this icon. The form will appear underneath us. On many websites, it says, click here for Ira's free offers. Do so. The form will appear that way. I'm Ira. Take advantage of this. I won't show this probably for a while now. You take care.